Bitcoin, I wish there was more exciting things to talk about on Bitcoin. I did hear that Michael Saylor and his strategy, or formerly known as MicroStrategy, did buy, I think, another 100 some odd Bitcoin over the last week or so at an average price of around 83,000. So they just keep buying more and more. They're almost at 500,000 Bitcoin in total.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway shares expert crypto insights and discusses blockchain evolution, market dynamics, and innovative trends. In this video, we cover his outlook. Let's watch to explore these ideas.
But in terms of price action, it's been dead. Stuck between resistance and technical support. I still think it's coming down here to the 72 to 74,000 range right here. You guys can see where that level comes from on a technical basis. This would be that big support level. Looking at Ethereum real quick, folks, we'll just go over this one. You can see, again, it did tag support right here, which, again, is this high and this high. It's gotten a small bounce, but if it dumps out again, you're looking at around 1545 as a major low down here. Same thing, support and resistance. So if this rallies 2200-ish would be major resistance. You can see, again, it was support here, then it had the big run up, then it came down, tagged it here, hit here, chopped, and broke. So therefore, this level now at 2200 or just below 2200 now becomes resistance. Gold today. Let's take a look at gold. Gold continues to hold up. It has not reached its upper band of the parallel. That, to me, would be the level where you would expect a sell-off. So, again, it took out this short-term high. That creates another likely scenario of upside. But just keep in mind, right around this 33,040-ish area, that's going to be that upper band. Remember, it is upsloping, so it'll inch up little by little every day. But right now, that trend line right there, as we can see from history, pulls back. So therefore we can extrapolate and kind of understand that the probability signals, if we tag that line, we get a pullback, maybe even down to this lower band here at around 2750 or so.
Bitcoin traders and analysts are closely watching a potential $70,000 floor as market fears reach peak levels this week. With Bitcoin trading around $82,000, investors notice that FUD, fear, uncertainty, and doubt, is peaking, hinting at a strong support level. The crypto market is entering FOMC week in a cautious mood, with all eyes on Fed Chair Jerome Powell for any dovish signals regarding interest rates. Upside liquidity is thick, and many believe that once Bitcoin finds firm ground at $70,000, a significant rebound could follow. Historical price analysis even points to a potential target of $126,000 by early June if the current trend continues. In the midst of this uncertainty, some traders see the dip as an opportunity to be greedy when others are fearful. Accumulation among top Bitcoin buyers is slowly returning, suggesting that long-term confidence remains despite short-term volatility. As market dynamics evolve and liquidity patterns shift, Bitcoin's ability to maintain support around $80,000 and possibly move lower before bouncing back is drawing significant attention. This week promises to be pivotal for Bitcoin, and every move will be closely scrutinized by both cautious and opportunistic investors. Market excitement grows as Bitcoin evolves.
And the first thing we see is retail sales coming in below estimates at 0.2% versus 0.6%. That would, again, the 0.6 was the forecast, so less than expected. The one positive here, and this is not a big positive over the long term, but we did see the market upticking a little bit on this data, was that spending was surprisingly strong. So while retail sales were a little bit lower, it still looks like consumers are still willing to spend. And again, there's some key data in the underbelly of this that is a slight positive in the near term. Now remember, spending isn't always a good long-term thing. Why? Well, because if people are spending and charging it on credit cards and then they don't end up paying those credit cards, it can create defaults, it can create major issues, again, that we see a lot of companies start taking loan losses on. And that, again, is kind of a precursor to what we saw in the financial crisis, right, with the mortgage industry. All right, the next thing was the New York Manufacturing Index here, or Empire State Manufacturing. That came in at minus 0.20. That is a nasty number. Expectations were minus 1.9. So again, much worse than expected. But as we can see from the data here, or at least the price action, is the markets have gotten a little bit of a move to the upside. Now, over the weekend, we did see some comments from Treasury Secretary Bessent, and he basically said that, you know what, corrections are normal for markets. And all of a sudden, the market didn't like hearing that. Why? Well, because if you go back really since 2009, corrections haven't been looked at as being normal. They've been saying, no corrections allowed. Get the Fed printing, get the government spending so that we don't have any downturns, so these political figures can get re-voted in and continue to do what they do, which is very little, as we know. But the point being, again, is that ultimately the market's, again, trending slightly higher on the day, at least initially. But you can see, again, this morning, we did see an open lower in the S&P, and then, again, a grind up to the upside. We'll see if it holds today. Now, let's talk about the daily chart. We know that the daily chart was into support last week. The key levels that I showed you guys, again, this high here with this high, there's a parallel. If you drop it down to this low, it matched this low perfectly. So again, in a technical sense, were we due for a bounce on Friday? The answer is yes, we were. As we can see there, the question again is, how much upside do we get? And also, what's the power of this parallel? Because all parallels are not created equal. And remember that. That's really important. Parallels, to me, that go back a long time, so that are longer in time length, those are more powerful. All right, when you have a parallel like this that just goes back to the low end in August or so, it's kind of like, okay, it's good, and it probably is due for the bounce. We knew the market was oversold. We got to correction territory on the S&P. But again, a correction or a parallel that goes back, let's say, 6 months is not as good as a parallel that goes back a year or a year and a half. So what does that tell me? It tells me that ultimately, yeah, we could see a little bit more upside, but eventually we likely are going to break down. And again, this can go along with a lot of the economic data we're seeing with recessions. We remember the consumer for the longest time has been the backbone of the U.S. economy. And if that consumer starts to struggle, which it does look like they are, we know that that spells trouble for the U.S. economy, all right? So again, that's all indicator that ultimately the markets are still overpriced even after this significant correction.
Bitcoin's technical outlook appears increasingly bullish as its stochastic RSI has printed a clear bullish cross, a signal that often precedes sharp price rebounds. The stochastic RSI measures momentum by comparing current price movements to their range over a set period, operating on a scale from 0 to 100. When the blue %K line crosses above the orange %D line from an oversold area, it suggests growing upward momentum. Historical data shows that each time this bullish cross occurred, Bitcoin experienced robust recoveries within 3 to 5 months, with average gains exceeding 50% and sometimes even reaching 90%. Market analyst Mergen the Trader believes that if history repeats itself, Bitcoin's price could surge to at least $120,000 by July or August. This prediction aligns with previous fractals, including a 90% rally from November 2022 lows and a 98% move toward its all-time high in January 2025. The bullish reversal is further supported by Bitcoin's 50-week exponential moving average, which currently sits around $77,230 and has served as a strong accumulation zone since October 2023. Should the price drop decisively below this level, it could target support around the 200-week EMA near $50,480. Adding to the positive sentiment, hedge funds are capitalizing on the dip. A recent surge in the rolling 20-day beta indicates that these institutional investors are buying into Bitcoin, reinforcing the potential for a strong upward move. Investors are increasingly optimistic, anticipating that this bullish cross will trigger further hedge fund buying and drive Bitcoin's price to significantly break new records in the upcoming months. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.